We have the management now joining us, Mr. Mithun K Chittilappilly, who's Managing Director at VGuard. Mr. Chittilappilly, thank you very much for joining us here on NDTV Profit. Can you take us through the numbers? It turned out to be a strong quarter. Was that an early summer impact that your company had in fourth quarter?
So some part of it is the early summer because last year we had a low base, on Q4 because summer was much delayed. We had mentioned at that time that, it is much more subdued than usual. So obviously that is one reason for the top line growth. We have also had improvements in margins due to lower commodity prices and some improvements also because of our own work we have done on, supply chain and product costing and all that stuff.
Margins have improved sharply. Can you tell us where do they stand right now and how do they compare to the previous quarter?
So our EBITDA margins in Q4 for FY16 has been 12.77%, vis-a-vis 8.35% last year. So almost 4.2% increase in EBITDA margins from Q4 to Q4. And for the full year, I think the EBITDA margins are close to 10%, vis-a-vis about 8% last year. So almost 2% improvement for the full year.
Is that kind of a margin growth sustainable going forward?
So some of those margins are, like I said, at least some of those impact is due to lower commodity prices, which will, we have to see whether we can take price increases when these commodity prices go back up. That will to a large degree depend upon how the external environment behaves. For the current, situation, it looks pretty promising because we are actually having a good demand for the product. So right now it's okay. Q4 and Q1 typically tends to be more stronger quarters for us. So better to look at full year margins. So we are planning to hold on to 10% EBITDA margins or, between 9.5 to 10% EBITDA margins for the current financial year as well.
And can you tell us about the kind of volume growth that you witnessed in this quarter?
We had a sales growth of about 16%. Volume growth could be closer to 20% because almost 30% of our products is wires, and in wires and cables we have had almost 7 to 8% decline in realizations. So if you remove that impact, volume growth for us could be in the region of about 18 to 20% for Q4.
Okay, so that's a strong volume growth that you're targeting ahead with strong margins as well. Talking about specific segments, your stabilizer, fans and pumps did exceptionally well. Can you tell us now targets ahead for FY17 for all of these?
So if you look at product-wise, we've had very strong growth in stabilizer segment, our pump segment and our fan segment. They've really, driven the growth. And of course, some of the new categories like switch gears, etc. have gone extremely well. As far as monsoon is concerned, yes, monsoon is very important for us. I mean, Q2, although the sales do dip because of monsoon and all that, it is important that we have a very good and adequate monsoon this year because last 2 years rains were not good enough. And we have started to see the effect of that on the rural economy, in the following quarters. So, and this year the monsoon is predicted to be good and above normal. And if we have that and adequate and the good distribution of the monsoon, I think we should, have a good year as well.
Right. Your release says that, your non-southern segment did really well. Can you tell us how much is the contribution southern versus the non-southern market and how was the performance of the non-southern market?
So if you look at the revenues, roughly 1/3 of our revenues are coming from non-south and 2/3 from south. If you look at the Q4 numbers, both of them have grown well because like I said, the summer had started in south first. And only in the middle of April, it has started to, set in the other parts of the country. So southern part of the market was extremely warm during Q4. So the growth has come from both the markets. We are hoping that in the current year, non-south should grow better. Because last year, again, due to various reasons, our growth in non-south was not, very good. But in Q4, both of them have grown well.
All right. So now the summer has come in early. The monsoon is expected to be better. Can you tell us what kind of new launches can we now expect from your company?
So we are having some new launches in the kitchen appliances space. Currently, the kitchen appliances space is contributing roughly about 40 to 50 crores of our total revenue, so it's a very small part of the business. This business is only sold in select markets with two categories. We are planning to launch the third category in southern market, starting with Kerala in the current financial year. We are also looking to launch mixer grinder in the other markets of Tamil Nadu and Andhra Pradesh in the current year. We are right now only selling in Kerala and Karnataka. So, kitchen appliances business, we believe, will become a significant part of the V-Guard portfolio in the next 4 to 5 years. I cannot comment on exactly how much revenue we will get. We have some internal targets in mind, but I'm not at the liberty to talk about it in terms of revenue numbers.
Right, so you can't talk to us about the targets, but can you at least give us a sense of the kind of investment, capex that you have planned for FY17?
Current year capex should be between 30 to 35 crores. We will be setting up, commissioning two new plants. One is for wires and cables, and one is for allied to wires and cables, PVC compounding plant, which is a part of the wires and cables business. Both these factories are supposed to come in the current financial year by Q3.